All right, let's get the microphone check out of the way here early. We got a little less than 2 minutes to go. Go ahead and let me know if you can hear me across the various live streams that are going on right now, the private and the public streams. The public streams are going to be YouTube and Twitch. If you can let me know if you can hear me there as well. I get a little bit faster confirmation over here on some of the private streams. Thank you guys. Let me know if I sound okay out there on the public streams. And then we'll get started in about a minute. Ha ha ha. You guys are so funny. All right, let's go ahead and get the music under control here, and we're going to jump right into today's live stream. There we go. All right, let's go ahead and jump over into our main screen and get started. Hello and welcome to Landy's Crypto Corner. Today is December 1st, 2023, and it's a Friday Bitcoin analysis live stream. Of course, we will take a look at Dixie, gold, and traditional markets today as well. But we are going to first look at the Bitcoin spot chart here, and I'm using Coinbase as usual. And you can see that Bitcoin has hit our 39K upside target now. This is a target that we've been looking for since Bitcoin's been trading above and especially closing above that weekly at 37.7. So it did hit $39,000 and 0 cents. So it's a direct hit on our overhead target. Now you might be saying, but Landy, whenever you show us the weekly there that you keep saying is $39,000, didn't quite hit it. Well, that's because the weekly is technically at $39,015, but got to give it a little slush there. $39,000 being an even number to around $40,000, as some weeklies did get their closes around there as the exchanges were trading a little out of parity back when this weekly was put in. Now, this weekly is going to be the, this is the daily, so let's go to the weekly. That would actually help, huh? And this weekly is going to be the high of the consolidation or reaccumulation structure from 2021, that being June of 2021. All right, so, what's going to happen from here? That's kind of what we're going to investigate today as we take a look at this extremely zoomed in daily chart. Give me a second here. All right. So hitting the weekly there, good, not out of the question, of course, after closing above the 37.7 weekly here on the daily. I did get a close open swing of this weekly twice before, closing on it and then getting a close open directly on it from the Thursday into today's candle. Good sign that things were probably going to test at minimum the monthly here at 38.5 to the upper second, which was trading slightly above there. Now it is pushing that upper second on the daily up significantly from that monthly area because it does adjust live to price action. What's my dog howling? He never howls. Mr. No Name's in the house. He must be playing with him. So the weekly here at 39K is the next big hurdle for Bitcoin to get over. If it does close a daily above here, I would be looking up to the weekly just above it at around 41. This is not that 41.8. This is the other arrow. Let's actually get this right here. The next weekly is this guy up here. This is going to be at around 41.8 to 42K. And realistically, I need to see daily closures that hold the weekly here at $39,000 to start looking for that target up there. And then, of course, there's going to be targets above that if we do see that area closed above. And that's going to be the next big monthly areas. And that's going to be up here at around 45.5 to the wick high there. This is actually another close up there at 47.110. But if we come over here and we start digging into this monthly and the monthly outlook, you can see that Bitcoin is, we got the close open above the upper first. So it's just, fairly simple to call out that it's going to, head for that upper second at minimum on a wick basis. And we are starting to see that just now. So let's get rid of that arrow as it got all squishy. We can also see that the upper second has adjusted now. So this is, of course, the criteria for aggressive expansion on the monthly. Every time that we've seen Bitcoin close above the upper second standard deviation, that has led to a new all-time high. Now, there has been cases in the past, one in particular from the 2014 lower high coming off of the all-time high, where in 2016 it swung it and then came back down for a higher low. And in this case, that we're seeing the same kind of setup here. For reference, we can just go ahead and look at that real quick here because we did mark this prior. And this is going to be a very similar setup to the lower high in 2014, and that was June-July time frame. Now, the lower high wasn't actually put in or solidified until September of that year. But you could see, it was testing the prior lower swing high, broke out above it, and then it swung that lower high, came back down in higher low fashion, and then on to new all-time highs. That's very much what I believe is going on here when looking at the Bollinger Bands and price structure. It is very likely now seeing where Bitcoin closed last month and is now starting to push in December, that if it doesn't put in a high in December, for instance, throw a wick and close red, and then we see January come down and retest, then I would look for it to head up to somewhere around 45,526 here at the close open. There is another monthly just above it at 47,100 or so. But it's really going to be 45.5 to 48.5 or so as the next big area of interest on the monthly. If it does swing, just, this is maybe the final push of this current move, and then it comes back down during the month, then we just look to where it closes in December on the yearly close as well. Of course, the last quarter of this year coming into the first quarter of next year, and then we can evaluate, where are the most logical pullback targets. And from here, the upper first is the most logical pullback target. It's now in line with this wick low over here at around $33,000 on the monthly. So a retest of that area, not out of the question. And quite honestly, if it's going to get there, we can't rule out a retest of around 30,300 to 600 on the monthly around the close opens here. Possibly even, a little bit below there because there is a bit of a swing here on the highs at around 29,250 as well from the monthly perspective, and quite honestly, anywhere above the basis is fair game as well if it does lose the upper first. But, we're far away from that right now, but we do need to understand where these things are. And the basis is currently coming in at 26,100. Now that would be violating daily structure. So One of the big areas that this just impulsed from was this low over here off the lower first of the Bollinger Bands on the daily here at 26,500. Then we get a nice impulse up, and then it's just been sideways and up ever since. Pullbacks here and there, nice little dump off to the basis, little swing under it, but didn't even violate the close open structure there, and then back on up. And you might note that there is a bit of re-expansion going on here on the daily when looking at BBWP as well. So volatility in this case is looking to re-expand to the upside. Of course, that does make available the downside standard deviations if things were to kind of fall apart. Right now, that's currently lower seconds coming in at 35,650 or so, which is just below this 35,750 area and in between this 35,550. So, fair game if things were to get nasty to the downside. But right now it's, sideways and up. So not really too interesting in that regard. If we do see a close over close structure up here above the basis, we're likely to see, volatility flip. The moving average, thus begetting, a bias for expansion to the upside, hitting some of those deeper targets. And, we'll just take it one level at a time. Of course, above 39 to 40K, then I'd be looking to that 41.8 to 42K area. But right now, as long as it's closing above this last closing high up here, which is coming in at 37,880, 37,900 or so, looking good to keep heading up. We also saw a little spike down in yesterday's price action to that area as well, hitting around 37.5. It did close under it, close open though, getting above it. If you see a retest, you want to see that area preferably hold up to around the next low side area at around that 37.4 to 5. So if we do start seeing any kind of closures back below this closing low, and that is at 37,250. Keep an eye on the wick low. That is at 36.8. Below there, we're looking to that lower first at 36.5, probably lower second area around that 35,750, 35.5 area down there. So so far so good. Looks like it wants to keep testing further up. If we do see a closure today above 38,180, so basically 38.2, then we are looking for this to continue testing the highs, possibly higher. And of course, that high wick coming in right now, right at that $39,000 even here on spot. Now, the 2-day did just open, and we saw and see a compression on the 2-day. Now, the best play in all markets is a compression to re-expansion. So where would we see this re-expand? That would be above the upper second here on a close on the 2-day, and that's at $39,054. So above there, we would see re-expansion of the Bollinger Bands. To the upside, of course, the downside deviations upon initial expansion will also expand to the downside. So in this case, we're looking at the upper first being a nice basing point right now at around that 37.5 to 37.6 area. If it does drop, then on the 2-day, we're looking down to the basis. That's coming in at 36,269, actually. Nice. Below there, the lower first is coming in right across these lows at that 300, 34.8 to 35.3 or so. Now it's coming in at 34,878. So basically roughly around $35,000. Below there, the lower second is actually within the range of this current initial upside impulse. And that is a good thing. That's around the 33,300 area. And momentum will remain to the upside on the 2-day on any closures above 38,500. So basically that monthly. So I would be looking for this, heading into Sunday's close, we'll see the 2-day close. And if we do start seeing it get above that upper second and or continue to push it up, then we're looking for those daily targets further up at the next weekly area above 39K. And if it does start to fall below that 37.5 area, that would be below the upper first. And then we're looking for a bit more consolidation before a larger move. And pull back from here would not be out of the question. And in fact, it'd probably be healthier if Bitcoin pulls back sooner rather than later. The further it pushes things up, the more likely it is to have a much larger retrace in the future. One could argue that this sideways and up price action will probably produce that as well, but it's pretty damn bullish right now. So could it use some cool down? Sure. Does that mean that we're going to get it? No, not necessarily. But if we do start seeing that, then we have pretty clear areas of interest. One thing that I didn't mention on the monthly that I should is the, excuse me while I fix the chart here, is the Stoke pivot has updated, and we are starting to see the monthly Stoke get into the overbought zone with the K read. The momentum pivot is now 33,530. So, if we start seeing things close even within the local range below that area, we will see an initial cross back down on Stoke. So, this is going to be a pretty important close here in December. So we would preferably want to see continuation to go swing that 45 to 48.5 area and then come back to it later. But if it doesn't, it's also not a death sentence. One of the big things that you do need to understand about a regular Stoke versus a Stoke RSI, and this is a regular Stoke, is that when things are in the overbought and or oversold zone, that's typically where we see the biggest moves. So, December, might end up being that. Just keep that in mind. December into January, first quarter of next year, because it is a monthly. And, it's not out of the question when looking at the 2-month. Now, one big thing that I'm going to draw your attention to, though, is, and this should be scary for bears more than anything else, is Bitcoin is pushing the upper second standard deviation and got a downtick in volatility. Why is that? Why is BBWP saying that there's a downtick in volatility? Well, because we had an initial uptick in volatility as Bitcoin moved away from the basis to the upper second standard deviation. Now the basis has corrected and gone sideways now at that 26,186 there. This is also a mean reversion back to the highs as it stands right now. It is still confirmed expansion. You can see that the upper second is getting a slight bit of expansion here. On the close open structure, and we see the lower second is also getting a slight bit of expansion. Now, what you do need to understand about this is there has been no time that we have seen this expansion occur on the lower second, that being down here, where Bitcoin has gone on and made like any kind of new lower lows. So, we've got a few iterations here in Bitcoin's history. This is just a close above the upper second. There's not a lot of iterations of this, but you can see the expansion of the Bollinger Bands, and it puts in a high, it's over, it's going to go back and hit the lows, it's going to go make lower lows. We got downside expansion. No, this is confirmed upside expansion in this case, and we do see the lower second standard deviation getting that expansion. Now that, it started when Bitcoin got its first close above. The only difference here from 2016 in this case is that Bitcoin has not yet closed above the basis. We see this back here in its initial closure to the close open above the basis. Again, downside expansion. And we did not see, we saw slight downside expansion. So, I guess to be fair, we did have a bit here in 2019 when it put in the lower high here. Now, when looking at structure, I do want to call this out. Back in 2016, it tested an already, a lower high over here. On this move from 2017, it was kind of straight down. We didn't get a real lower high until 2019. So there you've got, higher high, lower high, come back for a retest, come back down and hold support, and then off to the races. We've got higher high, lower high, come back for a retest, come down, off to the races. So you see the 3 candle structure right here in relation to this lower high on the monthly. This is something that, we're kind of playing out a mirrored scenario cycle after cycle. So I would not be surprised to see this lower high tested, and then, come back down for some liquidity and then off to the races again. So, my prior thesis where I had said, Bitcoin has never tested the lower high, I was wrong, and had to reevaluate that. And as you can see, even just now, reform my thoughts around this lower high in 2019 that led to the black swan. It wasn't a freaking black swan. We could see that coming a mile away. I'm going to say it over and over again. It was on the weekly. It's painting a downtrend. Now, in this case, another thing that, bears might want to be aware of if you are bearish on any of this. Yes, the upper first is right there at 46,000 rather, 850. The upper second is now at 59.9 on the 2-month. Now, why am I bringing up the 2-month? Well, we have a 2-month. We've got a monthly, a 2-month, a quarterly, and a 6-month, and a yearly close coming in, right? So we do need to be aware of where things are. When looking at the 2-month, we have a pivot of 23,800. Okay, this has not changed, but note that this is going into a cool down. This is a mean reversion, right? Back to the basis. This is setting up for a very large move. So we might see this cool down further coming into the end of the year, and it's likely that we do because this is mean reversion back to the highs. The other thing on the 2-month is if it closes above, $35,000 here on the 2-month close, well, the next big area to look at is, 57 to 59 by the upper second in terms of structure, and then the all-time high closes at 61.4. And then, of course, the wick high is at $69,000 or so, I should say. This is quite frankly a very bullish structure. It's a very big structure, which means that there's a lot of room for movement in between the ranges here. The other thing is, pay attention that this is still a cool down in the quarterly. This means that, when the quarterly starts to get expansion, well, it's going to be a big move. The move in the moves in Bitcoin, of course, as I mentioned last stream, have, been weakening over time, but from the position of price action right now on the quarterly, this is just continuation. From the quarterly, the next big area is the close open up here at 46, so there's our 48.5 to 48.5 area from the daily perspective. Next big area, of course, is the $58,000 to $59,000 area. And then, of course, the highs or the all-time high. You would want to see things holding above that 24,770 area to 25K or so. If things do pull back, if it throws a wick down at the basis here on the quarterly, it's no big deal. You don't want to see it happen in this quarterly candle, though. I will tell you that. You'd want to see it happen in a subsequent quarterly candle as a back test or a backfill, and it's more than likely that it would head towards that $30,000. It's confluent across the quarterly, the 2-month, the monthly, the weeklies, all of that. And that would be where I'd be looking for a back test. And this is a big cool down structure that's getting ready to go bullzooka mode. I could tell you right now that the monthly is nearly there. And it's likely it's likely going to be local resistance to big bullzooka, and it's probably, when it does happen, it's probably going to happen pretty quickly. So if we do see pullbacks from here, I know what I'm doing. Do you know what you're doing? I will tell you what I'm doing. I'm buying way more. I've already accumulated through the entirety of this bear market on the major lows, specifically when we were below $20,000 was the bulk of my buys. And then, anywhere below 25 when we were heading down on these two spike lows, I picked up quite a bit as well, and then also traded it. But if we get one more big pullback, I know what I'm doing. I suggest you know what you are going to do as well in that scenario, should it happen. And also, should it get continuation, you can still trade that to the upside. It's not over. You didn't miss out. The biggest moves are yet to come. All right, so just understand that. And for those that believe this is it, it's over, let's look at the weekly. And then we'll go down. We looked at the daily and 2-day, and we'll look at the 5-day, 4-day, 3-day. I know I'm going a little bit out of order, but bear with me here. The weekly is still expanding. All right. We just tested the upper second standard deviation here on the weekly, and it is still looking very, very healthy in terms of expansion. The moving average is catching up, but we could even see BBWP come down and bounce off the moving average, get under it. But until the moving average flips over with it, not a big deal. And we'll still see residual expansion to the upside in a more aggressive fashion, as long as Bitcoin is closing above the upper first at 34,800. Basis is now up at that 30,400, right in and around the weekly closes as it is. So, 30, yeah, it is 30,400. So, this is the index, so it's going to look a little bit different than spot price, as it is aggregating price. So when looking at, Bitcoin spot, you can see that basis is now above this weekly. Now, this is something that we've already pointed out earlier this week, but 30,600 or 30,300 to 600 is also a major area for, a retest on closes for all of the larger timeframes, including the quarterly. And, that would be my main area to the downside to watch should things get a violent pullback. And it just makes sense to go test that area structurally anyway, as that is, the breakout area on those longer term timeframes. Doesn't mean it's going to test it, though. Just understand that. When you see expansion on the monthly, it's already confirmed expansion. From here, it's only just getting above that upper second standard deviation. Maybe there's a pullback, and then, either here or higher. And then, it's usually off to the races after that. So prep. Make sure you're prepped. If you hadn't been prepping this entire time, I don't know what you've been doing. Maybe you've been too enamored with the capos of the world or the profit blues of the world who do not know what the hell they're talking about. But yeah, I have no problem taking shots at them. They suck at what they do. I'm not the only one that will call them out for their bullshit. Excuse my language there. But yeah, is there invalidation for this particular impulsive move on the monthly? I would say, it's caution below the lows here, but, I'm not looking for any lower lows than the macro low. Macro low is already in. We have what was a major low confirmed as a macro low back here from, from August into September, and then October confirmed this as a major low, which solidifies the lows down here as a macro low. That's how it works. That's how you call a macro low. At worst, and probably the worst case scenario that I could even think of would be a run back to the lower first, somewhere around $20,000. I highly doubt that is going to happen. I think even that is out of the question at this point. That doesn't mean it is out of the question, but that's my personal thoughts just from looking at current structure and evaluating where we are in terms of expansion and contraction on the larger timeframes. Now, I could be completely wrong, like I said, because we're seeing the 2-month go into a cool down. And here's another confluent area. The lower first is above the actual macro low now. And even on the 2-month, if you're looking at a swing chart, we have a low, a high, a low, and a higher high. So we have structure already built. If it does take out and consolidate, if it was to break below 24,900, for instance, on the 2-month chart, it's just a longer form consolidation. It is not indicating that there would be any breach of the macro low down here. In fact, that a second chance at accumulation would be one of the rarest things that I think I've seen in Bitcoin's history. And in this case, we often get slight spikes down. 2020 was a boon for people if they were paying attention. And you can see that the lower first, though, is at $20,000 here on the 2-month chart. When looking at the quarterly, it's the lower first is all the way down here at $10,000. That's going to aggressively move up. It's very young, and in fact, this is going to be different on. I guess not on index. It's about the same. This is likely going to move to some of those nasty bear targets that everyone's talking about. But you let me know if you see where this ever hit the lower first on the quarterly. Never. So, but it's the first time for everything. But I do believe that the people who are calling for that right now are out of their minds. At least right now. Maybe someday. Never know. Maybe it runs the highs and double tops, and then it all falls apart. No, I highly doubt that. By the time this thing actually runs to the all-time high again, that's where the real FOMO is going to kick in. That's where the real big bullzuka is going to get kicked off. You'll start seeing signs of it over here at around 48.5, but you'll probably see some violent pullbacks and profit taking and stuff like that. Maybe some dump offs here and there, and then it's probably going to be up and to the right for an extended period of time and a very large long-term time frame impulsive action, price action. All right, so that's kind of it for some of the longer-term time frame Bitcoin stuff. Got to get that out of the way as we did have the monthly close. As we get closer to the end of the year, we are going to revisit the monthly, the 2-month, the quarterly. Might even take a look at the 6-month. We can even do that now. We can look at the 6-month just for the hell of it. We can see that, oh, hey, what's that? That's a higher low on the 6-month chart. Go figure. Bands aren't going to do much on the 6-month, but it's a higher low. When was the last higher low? Well, it was over here in 2020. So, this is a higher low in relation to that higher low. If it's going to put in and maintain its 6-month structure, which, by the way, is just up and to the right, then it's going to push up before coming back down for another higher low. And typically, from this structure right here, because we have higher lows that are fairly close together on the 6-month chart, this tells me that this is probably going to push much, much further before it puts in another high to then put in a higher low. But that's just my personal thoughts from looking at this in my experience when looking at impulsive structure on very long-term time frames. And then, of course, we've got the 12-month or 1 year, which, oh my God, it's going to top. Look at it, it's going to roll over. No, it's literally just a high-level consolidation. Being back above this yearly here, obviously, this is a log scale, so this is a massive range, but it being back above the yearly that set off the higher high breakout, which is the January of 2020, 28,980 close. It looks pretty good, especially if it can close above there. So, we'll look at that stuff and revisit it. It's going to be more focused on, where are things on the quarterly coming into the end of the year? Where are we on the 2-month coming into the end of the year? As we get closer to the end of the year. And then, of course, that monthly. We want to see that close above the upper second standard deviation to really look for aggressive expansion. But if it does pan out at the upper second, that's going to present a lot of opportunity. So I would be excited if it did not get above the upper second standard deviation. To be quite honest, I'd be excited for a lot of the people that are sidelined right now because, hey, there's your shot, man. This thing's going to go. All right, let's go ahead and look at the precursor to this move to the upside, which was pretty obvious that this was going to happen. And I'm going to show you right here this higher low structure here that was solidified on this candle on the 28th was the telltale sign that things were going to continue testing the highs as long as price stayed above this candle closing structure low. And the low was there at $37,000 and specifically closes above 37.7, which was this close open right here on this current low on the 12-hour was, indicative. Basically, it's the weekly. I said in my Bitcoin in 60 seconds videos, I said this in all of the live streams lately. If we close above 37.7, that preserves the chance for Bitcoin to run the monthly at 38.5 to the weekly above at 39 to 40K. That's what we have seen. Also, if you look at Stoke, on this higher low close, the very next few candles confirmed a Stoke shift, and it's been up and to the right for Stoke. Current pivot's at 38,580. Bitcoin's about $200 above there right now, but the subsequent candle close up against the upper second did flip Stoke back to the upside. And you can see that the subsequent close then kind of turned it fully to the upside, and that was even on a red candle. That was your indication that it was probably going to come down and hold support. And as long as it didn't pass this prior low, we were likely to see this head back up and retest the highs. So that was kind of your precursor to the daily move up. We are starting to see consolidation at the highs. When you see compression at the highs, that's a warning that if this starts to close back above the upper second at 36 or 38,630 right now, which it's currently above, then this is probably going to get compression and then re-expansion and just march the bands to the upside. Thus, it's in a markup phase, and you don't want to get into a battle against the markup phase until you start to see a structural shift. So any kind of close back below 37.7 at this higher low right at the weekly, so beautiful, and the basis here that specifically starts to drop this wick low next, which is coming in at 37,500, then we can start looking for a bit of a markdown to the next low, to the consolidation, and then so on and so forth. Maybe it eventually gets to like 35K. I'm not in that camp right now until I see a change in structure on some of these time frames, like the 12-hour. 8-hour also bouncing off the basis band, held the lower first. So, this is all just beautiful, beautiful uptrending structure, right? Like the trend is your friend until the end of the trend, and the trend has been pretty clear. And remember, the other side of that is when the trend is unclear, everyone's in fear. So, the trend has been pretty clear. There was a potential when it put in this lower high over here that if it took out the lower low, we've got a structure change. That did not happen. It just put in a higher low and thus a higher high, continue the overall trend here on the 8-hour. And, 8 hours pushing the upper second standard deviation. We saw a nice little compression when things came back or mean reverted to the basis. And now we're seeing an upside expansion again, thus giving us the bias that as long as it's staying above the upper first at around 38,000 to 38,200, then it's likely to keep continuing to test the highs. 38,150 is actually the momentum pivot. So that range that I just gave you at 38 to 38.2, kind of governing this upper first. The reason why I'm giving it a bit of a range is you can see that it's at 38,150, which is actually the momentum pivot. The reason why I'm giving it some slush is because intra closure, meaning that before the close, if price comes back down towards it, it will adjust down with price in real time. So it's, if price was to head towards it, it's probably going to be around 38. If price continues to push up, it's probably going to keep getting pulled up around 38.2 to 3, somewhere around this high here. Maybe, that's coming in around 38.250. That's the next big area. It's also the breakout candle structure from these two guys here. If it closes above the highs here at 38.431, looking for it to, of course, continue to test the highs. The momentum pivot, of course, that 38.150 is going to be a good one to watch as well. We see a nice little bullish reset in the bullish control zone for momentum on the 6 hour. 38,400 is going to be the momentum pivot. Came down, held the basis perfectly. Got a slight bit of a range built, and then it's a little bit of expansion here. So we're not seeing like a super tight compression like we saw back here. I would look for, things to, keep pushing the highs as long as it's above 38.4 on the 6 hour, and then specifically somewhere above this 37,800, 37.7 area. Of course, that is a weekly closing structure at 37.7. And then 4 hours looking the same. This is just sideways and up, kind of painting a markup range. Now, specifically on the 4 hour, when you see the 4 hour lower second above this low at 37,500, which, man, that came in even 37,525 cents. Nice. But it's around that 37.6 to 37.7 area. That's where you got to be eyes on. If Bitcoin does head down towards that lower second, because if it breaches the low and gets expansion to the downside, then we're looking for the next big areas that we've been talking about. But, above $38,000 at the basis, this thing is looking fine to keep testing up. And we can even go down. We can look at the momentum pivot. Momentum pivot is at $38,000 as well. Go figure. All of the key areas should have some confluence, and they do. If you start seeing things that get out of whack with confluence, then it's usually going to be some sort of sideways price action, maybe a little bit of reset and some of the lower term timeframes. But it looks good. Expansion looks good on the 4 hour. Looks a little less good on the 6 hour. But if we see a close over close that does confirm this expansion, just be aware that it's not directional, and we are seeing upside expansion of the Bollinger Bands. I would just pay very close attention to it, and where it is on the band. So if it does start to lose that basis and the next low, then it's, going to go back into a consolidation. And then this was a sellable high, at least in the very low term timeframes. 4 hour looks good though, and I'd favor the 4 hour over the 6 hour right now. 3 hour looks good still. Nice compression to expansion on that higher low strike at the lower first after this is my favorite setup of all time. I've said this over and over again. Expansion to the downside, reversal structure that regains the lower second and lower first. Comes back, mean reverts to the basis, and then takes out the lower highs to reform structure or break structure. Comes back up to the upper second, upper third area. Comes back down to the basis and finds its basing point at support, technically, and then also on the lower first, and then up into the races. Regain that basis, regain that upper first, get nice tight compression, and then get expansion to the upside. And we are seeing this is still ongoing on the 3 hour, still healthy expansion to the upside. Stoke is pivoted at 38,540. Not too concerned about that being in the overbought zone. In fact, like I've said, bigger moves happen in the biggest moves tend to happen, not always, but tend to happen around the extremes of a regular Stoke, which is the overbought and oversold zones. 2 hours giving us that same darn look. We had downside expansion off the lower second, ran the upper second the other way. After, that lower second was at support, and the lower second and upper second are either going to act as reversal or continuation areas. So if the support broke, then we're looking for continuation on closes below that lower second. In this case, that held, and it held the lower second, thus getting a reversal. And then the highs broke. We were looking for initial resistance, got it right here. Let's go ahead and make that a little bit bigger so you can see it. Got that initial resistance around the highs, right? Wick high into the highs here at the upper second, upper third. So you're either looking for one of two things. You're looking for it to drop back to the, upper first and lose it to the basis and then come back down to its base at the lower first. In this case, it just continued and closed above it, and now is coming down and retested that area as support. Nice higher low here. This is, in my opinion, very good. And even though the momentum pivot is currently at 38,900 on the 2 hour, what I would be aware of is, yes, you could see a double top here in terms of, high and then higher high and then come down and take out the low at 38,231. But what I would be aware of is a bullish reset on momentum. It holds the upper first at around 38,405 and then just continues to test the highs. That's what I would be looking for first. Although if it does drop the low here at 38,231 to the basis at around $38,000, then I would be looking for it to head back down to the lower first, which is right there at the weekly at, guess what, 37,700. So that's not my first take on this. We're going to see some short-term resistance here. That's normal. It's at a major level at the weekly. But I'd be looking for the monthly to try and hold up around 38.5 to 38K or so. And especially, it's basically when you see a markup phase like this, you're looking for it to play in between the major support and resistances. And that's basically today's candle playing between this weekly here at 37.7 to the weekly up here at 39. That's kind of its new zone. If it starts to drop the 37.7, then we've got the zone at these two weeklies between 37.7 and 36.2, basically. It's pretty easy and straightforward stuff. Let's go ahead and take a look at Dixie and see how Dixie's doing. Dixie did get a very nice bounce, and it hit our 103.50 area on the daily. Did not close above, and is now, possibly pushing back below that lower first. What I would be aware of, same thing that I said over here, is it's getting two extremes on the daily. It's in a bit of mean reversion right now. So even if it comes back to the lows and slightly lower, I'd be aware of a wider bounce on the daily sooner rather than later. Now we do see that the lower second is down there at our next big target, which is at 102. This is not the right chart, though. This is the wrong chart. Let's go to the right chart. There we go. And we'll turn on all of our fun horizontal lines for support and resistance here. And we can see right here at the not 2 hour, but the daily, that the next big area to be looking for to the downside would be that 102 area. I would caution that, we're going to start seeing bullish divergence build up on the daily here. It is showing signs of mean reversion instead of expansion. That also means that as we see expansion of the lower bands, that's your residual expansion, still becomes a viable target even during mean reversion. It's just more likely that support is going to hold. In this case, if we see a strike down towards that 102 region, I would expect a wider bounce. And, it wouldn't be out of the question, especially if it paints a high here, at that 103.72 on the wick, comes back down, swings the lows, or maybe even makes a lower low. It's got a lower high to beat out to change structure. When looking at the daily divergences, it would also start to populate, I suspect, bullish divergence. And the SMA is at 102. The 102, it's 102.72? Yes, it's 102.72 at the SMA. So it's got, room to fall. Where would a 28 read be? So it would have to hold around a 28 to 29 read on the lows here. Let's go ahead and pull the bullish or bearish control zone down to that. Let's see where 28 comes in, just to see where it would create. No, so it'd have to be 29 to get some a bullish look here. Let's go ahead and take a look. All right, so or a bull div, not a bullish look. It's bearish because it's in the bearish control zone. 101.82. So actually, it would be nearly to some of the further downside areas that we've talked about. So we got the daily weekly area at 102. We have some higher time frames, I believe, that are in that lower area. You know what? Probably close over close. That probably updates to around 102, but 101, 101.80 to 102 region would be the next big downside area. If it did close below the lower first, though, at 102.77 on the weekly, it's going to be more heavily biased to go hit that 102. We're likely to see compression of the lower second coming up towards that area as well, around 101.5. But this is still downside pressure on the weekly. I would just be aware that the dailies, could start painting some bullish divergences and possible reversal setups this month. So doesn't mean they're going to be successful in like major moves to the upside, but I would just be aware that we could see it's still pressured down, but we could see some bounces pretty soon that are a little bit longer lasting on Dixie. So if it does get above 102.77 or so at this 103.73, geez, then I would be looking to the next high and a close open at around 103.90 to 104, 20 to 25 around the basis here, because this next wick high of this higher high that is a lower high, the next lower high above, I should say, I guess, is right there at the basis, right at around that 104.20 area. That is roughly where I'd be looking. Even if the basis falls below this high, I would be looking to this next high, as it is right around this consolidation rejection at that 104.5 region. So above there, I'd be looking at 104.5 to 104.69 up here, this zone, where the upper first is likely to end up pretty soon. So that's Dixie. Let's go ahead and look at gold. Gold has been doing pretty darn good. Hey, look at that. You may remember that I said once we get above the 20,034, 35, then we're playing in this range where that does make the 20,000. Did I say 20,000? I said 20,000. I meant 2,000. If Bitcoin is at at like almost $40,000 and we see gold at 20,000, there's going to be a problem. We want to see gold at around $2,000. We also do want to see gold up. I do trade and I do hold gold. So in this case, this is a beautiful back test on the daily and then move up. Next area to look for would be that $2,080. And if it does drop this higher low, I would want to see it drop the upper first and this 2016 to really go back and retest around $2,000. I would say that in the next closure into the close open that we'll see coming into Sunday's open for gold, the upper first on the daily is likely to end up around this $2,035. So that'd be the area to watch. Next area below there would be 2016 and then $2,000 or so. That would be, a big move from where it is, but this is just now getting expansion after a nice compression, bounce off the lower second, and then expand above the upper second here on the daily. Looking very good. It can stay up here for quite a while. $2,061 is going to be the momentum pivot. It's trading at 2,070. It's going to chase price action. I would expect this to bullishly reset, to be quite honest. You can see that on the daily here, no in-trend bearish divergence as it stands right now. We'll come back to it, but this was a downtrend. This is your uptrend. We don't currently have any in-trend bearish divergence. We could see bearish divergence between these two highs, depending on where today closes. But as it stands right now, it's looking to avoid it. It's trading above the 73.83 read at 74.35. So we'll have to see where this closes today and opens Sunday into Monday. And then we'll revisit that on Monday to see if there is a drive of bearish divergence. Again, one drive of bearish divergence is corrective. It is not indicative of a reversal typically. So I'd want to see multiple drives of bearish divergence before calling for a major high to be put in. Yeah, the next big area is at $2,081 on the 2-day. It's good above 2,043. 3-day is going to be 2006. 4-day we're looking at 2053. 5-day we're looking at it's closing today 2064, and the weekly is going to be the big one. Look at this. This is a nice expansion on the weekly. Closing above the upper second is indicating that it's going to test higher, possibly much higher. This is where we're probably going to see $2,100 on gold, is from the weekly perspective. The upper second standard deviation is at $2,050. It's a bit above there right now, and close is coming in very soon. So this is going to be confirmed expansion on a breakout on higher low structure. Not fading that. This is also like, it's significant expansion, but it's not. This is just now getting vertical. So, we might be seeing like the etchings of the last part of the weekly move, but depending on where this closes on the monthly, to be quite honest, this is the highest monthly close. Yeah, this is the highest monthly close that it's gotten. So if it can take out the highs there, it's going to go on a run from the monthly perspective. And, the monthly is painting the picture that 2,100 is in the cards there at 2,112 at the upper second. The upper first is all the way down there at 1992 now. Basis is now above this this higher low structure at 1872. Beautiful. It looks like it wants to go. Now, I will say it's mean reversion back to the highs, so, caution should be exercised here. We're not necessarily seeing a confirmed expansion from BBWP and the bands. So what this tells me is that it's a high-level consolidation that, might have some short moves and maybe even some really big moves to the upside. But until we see, moving average, BBWP turn up and over the moving average, this is all mean reversion back to the high side structure. And I'd want to see closures above the upper second to really get this thing moving, and or we see month over month gold just grind that upper second. So we would be looking for significant moves in price up that then would be followed by expansion, by the way, which would be kind of nuts. Then we're looking for very, very, very expensive gold prices at that point. I would estimate somewhere around $3,000 or more. But as it stands right now, that's not what we're seeing. It's a mean reversion back to the high. So be very careful if you're in gold. Obviously, you're not going to buy the up move. You buy the big down moves. We saw that a couple months ago already, in October. Went deeper than most thought, including myself for some of the daily targets. But, when it hit bottom, we accurately had said, like, this is probably it for this move. And tracked it all the way back up. Looked very good during the consolidation back above 1900, and especially when it regained 1950, it was off to the races. So, and that was back here when 1950 was the upper first on the monthly. It's like, man, this thing's going to run the upper second, but it's running it on mean reversion, which, you want to see that start to flip around month over month. So you do want to see this continue to $2,081, 2,100, 2,200. Get above even that upper second and really flip BBWP around, and then gold's going to go on a freaking massive run for a very long time. When talking about the monthly, looking at the 2-month, this is expansion to the upside. Now, this is where the 2-month is already calling this expansion to the upside. So the monthly is the outlier. And I would prefer to take the 2-month over the monthly because this is clean compression to expansion over the long term. Big accumulation, big downside move to retest some of the structure that was built after the retest of the low side structure from the way up. It didn't even really retest that hard, but we're looking at this thing just going. From the 2-month perspective, closures at the end of the year above $2,050 are going to really aggressively tick this to the upside. And we're already seeing 34 over 27 for expansion. We've got 1830 as the pivot. The 3-month is a bigger range, so we've got 2140 at the upper second, but this is a sideways and up. This is a markup phase on the quarterly, so big, massive crashes to the downside are nothing but opportunity from here on out, in my opinion. Looks very good. I like gold right now. I liked gold on the lows. So we've been talking about gold for a long time. And this was a beautiful move when this was put in, especially when it regained this daily, put in this nice rounded bottom down there. And then it was just boom, boom, boom on high volatility, expansion down, right back to the upper second, grind it out, come back, retest, and then boom, up for more expansion. Love it. Want to see more of it. So shorter term time frame pullbacks, not out of the question from here. Looks like gold is sideways and up from here on out for a while. Dow, hey, look at that. Look at this. Where are the bears at? Where did the bears go? Oh God, the bears are dead. Someone killed all the bears. So we've hit our target at 36 and 36.2 respectively. By the upper second, we've got a weekly target up there at the upper second. That was our 36.2 to 3. We have now hit that. It is pushing the all-time high. So it's only got a little bit more, just shy of that 36.3 on the close. That's the next big target. And then the next target here is going to be 36.4 to the all-time high wick at around 37,000. That's going to be the next big one. This is a nice impulsive move up off the lows. A pullback from here is just fine. As long as it's holding, I would say around 35 to 34.5, it's looking good. Remember, when it's high volatility, big moves can happen. We're seeing the spread in the Bollinger Bands right now. Looks really good. This is also, this is what I mean. And I've said this is what I mean with Bitcoin too on BBWP. So like the weekly is what I would equate this to, is you could see the move down in BBWP. Moving average never gets a negative slope. BBWP re-expands. Moving average was telling you that this was going to continue to stay volatile, and it did. It ran the lower second and third, bounced right back to the upper second and third. So big volatility. 32, 530. This is going to run the all-time high from the weekly. That's just, pullbacks in between are probably going to be very bullish, even if they're big ones. The basis is nearly where the reclaim area was that we talked about at $35,000. Once I hit that, it was pretty much up and to the right is what we were looking for. High level consolidation. I called this bullish. I actually had people message me after that stream that I didn't know that were sitting here watching this stream. They were like, "You're wrong. It's going to double top here. You're going to get your group wrecked." And I'm like, "Okay." I tell them what the conditions are. If it drops 35, then we're looking lower to go retest, maybe even gap fill. Maybe you missed that part, but we didn't get that. So the only other way that it's going to go is up, and that's what we're getting. So for those of you that want to message me stuff like that, make sure you understand what I'm actually saying. It's conditional. And we do see that, we did get a high put in on NASDAQ here. We're getting lots of profit taking. You're probably seeing all of the news about so-and-so's dumping their stock, man. The CEO of this company's dumping their shares. It's like, shut up. Shut the fuck up. You have no clue what their plans are, and you're going to take profit in major areas of interest. You might take it below if it might be a lower high than the all-time high, right? And then you've still got plenty. They've still got plenty of stock, trust me. And then they can also make moves with that liquidity now on the market provides for some opportunity, and they can hedge and they can get options and they can do all kinds of stuff. So just, man, people just make a big deal out of nothing. So 726 is the big area to watch. It's now around the basis. If that area is lost, then I'd be looking for a move down to 15.5 to around 15.3 here for a gap fill. Next area of interest to the downside is going to be around that lower first, which is at, well, what was this? I'm sorry. 15.5, yeah, to the lower first. And around this wick high here. You can even take the close. It's like 15.3. If I can actually get this to, yeah, it's 15.264. I'd be looking for a retest of that. If it does pass this low, then there's going to be much further downside. But for right now, it's a high-level consolidation. If it's going to look anything like Dow, it's going to bullishly reset on, it's going to bullishly reset and then head back up. Closures above 16,086 would do it. So not really, this is a consolidation on the highs. Like you see BBWP dropped off the map. We see the lower bands quickly catching up. So, we'll get a much better idea coming into the open of next week where compression is and where expansion is. And then we can gauge expansion to the downside. But if things were to drop right from here, it's likely going to swing that low and get a nice bounce, and then we come back to it. Lower seconds right there at 15,000. And I would say anything right now for the longer term time frames above 15,000 is fine. Pullbacks to 15,000 are fine. Look at that. That's the weekly basis. We're looking at like a sideways and up long form consolidation, I believe. We had the short form consolidation in terms of squeeze of the Bollinger Bands. We see long form consolidation, meaning pushing that daily up, the daily consolidating and pushing the weekly up on expansion. So in this case, we've got 41 over 22. This is just getting rolling. Pullbacks to the upper first are no big deal, and that's around 15. I would say 15.5 to 15.650 or so. 15.650 is going to kind of be the area that I would watch. Pullbacks to that 15.5, yeah, because there's a weekly right here. And then, come back to it later. It's likely that this basis heads up as well to around that 15.3 area on the weekly. So something to keep an eye on coming into the open on Monday. Weekly looks good on closes above 14,200. This looks like it wants to head to that 16.5 area. It's the next big area. And then above there, 16,650 to 16,700, 16,800 at the highs there and beyond. That's what I'd be looking for. All right. Looks really good. Let's look at the monthly. Remember, the monthly is a big higher low. So upper second is now expanded to, and then we had mentioned this last stream, it's expanded to the highs now. It's at that 16,700 area. Closures above. This thing's going to go for a big old run. We can look at targets probably closer to the end of the month. If it is starting to push that upper second, we can make some projections and predictions. When looking at the quarterly, it's back above the upper first. That's a beautiful thing after, by the way, coming down and getting a direct strike on the basis. And we've talked about this on the quarterly during our last quarterly conversation in September, but strike right at the basis, recovered and back tested the upper first. Upper second is the logical area to look, and that's at 17,800 right now. So that would be the next big area to look for. And then, of course, 18,000 and beyond for NASDAQ. That's basically what I'd be looking for. And if we do start seeing it close up around that upper second, we're going to start seeing expansion again on the quarterly. We're already seeing expansion, slight expansion on the 2-month. We'll see more on the weekly, but we're seeing that expansion beginning to take shape on the bands here. It is a mean reversion play, but it's, we tend to get like big cool downs. the big cool downs are your big lows. It's likely to oscillate around like it did back here if it's going to remain bullish. If it's going to double top, then we'll see a big cool down, and that would just be a move back to retest somewhere around the lower first, I suspect, as we are just now seeing expansion of the upper bands, which, mean reversion back to the highs. It also means that it could make higher highs. And that's pretty significant when you're looking at log scale on a monthly. When looking back at Dow, Dow on the monthly is doing the same thing. Upper second is right there at the highs. Again, it's a continuation / reversal zone. That is that upper second. If it starts to close above it, it's going to close above the all-time high, which means it's going to get expansion past it in terms of a band setup. And for Dow, we're seeing this as, Dow's going to be expansion. Man, Dow might take the lead in terms of the expansive look, and then it'll drag the rest of the markets with it. So remember, that is, then the 2-month. Yeah, Dow is probably what I'm going to be looking at coming into next year, because it's painting possible re-expansion to the upside, whereas the other ones are painting a bit of a mean reversion when looking at BBWP, because the highs are clustered across NASDAQ and SPY. And we'll look at that in just a moment, whereas Dow has a little bit cleaner structure. To be fair, if Dow breaks out because it has a cleaner structure and gets expansion to the upside, you're going to see NASDAQ and SPY move to the upside, aggressively take out the all-time highs. And then you've got a massive, 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 massive structure on NASDAQ and SPY. It's like a macro breakout that's going to probably lead to, I don't really want to say it, but if Dixie starts dropping off the map, we're looking at like a really crazy inflationary period. Let's go ahead and look at the monthly. We'll start with the monthly on SPY. Yeah, I know I'm going out of order with the time frames, but it's just, it needs to be hammered home. The one difference here is with SPY, it's a big consolidation structure from the bands. Nice higher low strike on the basis, pushing the current highs. If it can get above 459, then we're looking to the upper second at 469. Nice. Really? With the meme numbers all the time? Okay. And then, just slightly above the upper second is the closing all-time high at 476, and then we're looking to 480. It's not right. The upper second isn't right at the highs like it is on Dow and NASDAQ. But it's a nice higher low structure. I expect those areas to get ran. I expect the all-time high to get ran, to be quite honest. We're not seeing a compression to re-expansion here. No, we are. We're seeing a nice compression. This is our move back down to the basis and then re-expansion. It's just not coming from that lower angle. So, NASDAQ might be the outlier. Yeah. This is good if you own stocks, but the reason why I'm getting kind of an evil laugh going on here is because if these markets do what I think they're going to do, and what I've been telling you guys as a group they're probably going to do for quite a long time here, and then really letting my vitriol go towards all of these macro experts who were calling for lower lows in the middle of a 30% rip to the upside, which is just silly. And then shorting, telling, all of this bearish kind of sentiment surrounding these macro experts. And macroeconomic experts are not wrong about the pain that everyone is feeling, but they're wrong about the structure of the markets and where the auction actually is going. And in this case, I'm going to warn you guys in the United States and abroad that if markets are ripping to new all-time highs, that means that you're likely, if you're not a participant in the market, we're going to be seeing some pretty nasty inflation. So inflation is not going to get better, which means that the central bank is going to start losing their control over their narrative for tightening and they are going to be caught between a rock and a hard place, because if you look at the bond market, it's ready to fall apart as well, indicating that they can't hold on longer too much longer. So just understand that. We can celebrate our all-time highs when we're in the market. Just understand that our US dollar specifically for what we are looking at will be not something to celebrate. Therefore, that's why we start with Bitcoin every day. All right. Weekly looks good. Upper second is at 465. That is now, right in the thick of it at the highs here. I expect this to head to 460, 465 over time here. 410 is the momentum pivot for the weekly. Daily's getting a little stretched out, but it did test our 460 area today. So we've got our target hit there. And what do you know? The upper second on the daily matches the weekly here. Love to see it. We got our confluence. 465 is going to be the next big area. And then, of course, 470. 470 is the area on the monthly that we are looking to as well at the upper second. So it's only 10 points to get to 480 in the all-time high. Okay. If it's pushing this hard, it's likely going to break and get to the all-time high. So don't fool yourselves. Don't listen to the macro experts who told you to freaking basically short this entire freaking move up. I still get questions about it. Yeah, but so-and-so, I really respect them as a macro expert, this and that. Like, yeah, they could tell you all about the economy, what's going on with the Fed. That's unrelated to the auction that's happening in the live market. Telling people to sit out a triple bottom structure like this. I mean, you even got 4 lows on this. 4 major lows. A run from the low to the high that was just massive. And they're just fudding the whole freaking way because, yes, people are hurting all over the world. And that is because of the actions of their government. That has nothing to do with the auction in markets right now. Oh, but the liquidity's dried up. No, the liquidity dried up back here. What do you think happened after all the bank failures? Did we forget about the BFTP programs? Did we forget about how they're doing silent bailouts? Did we forget about all the money that's given out to buy up the regional banks? What are you people, crazy? Oh, but the failed auctions, man. Nobody wants to invest in the U.S. That has nothing to do with the live auction that's happening in NASDAQ, Dow, and SPY. Does it have implications? Yes, but purely implications. So frustrating. I watched some people that I truly respect and even recommended to you guys over the years turn into morons because they thought they knew everything. Oh, the market's going to go way lower because XYZ and the Business Bureau and all this other crap that I'm looking at. See, it's going to double. Everybody's going to get nuked and you got to be scared. I don't trust this move up. Scared. It's because they don't know how to actually chart the auction itself. It's because they don't understand technical analysis. They think that fundamental analysis trumps technical analysis because, well, technical analysis is just astrology for men. Well, bullshit. Technical analysis, as I've mentioned to many of you before, if you don't know it, you will not survive the markets. The thing that they don't understand on the fundamental side is, yes, you do need to understand the fundamentals of a company. That's going to give you a preview of how they're going to do when you invest in them. But if you are looking at the market structure, it's going to tell you a lot about the fundamentals of the companies that you're looking at. If you're looking at the market as a whole, and then you look at the companies in that market, you're going to get a preview of the auction and what's happening at auction. It will help you identify extremes on all those different sides, because what are you doing when you're doing TA? You're identifying what's happening at auction. What are people willing to buy and sell this thing for? And the fundamentals should be why, but they're not always going to be why. They could be because of future things that are happening internally. It could be because of new angel investors coming aboard. It could be because of XYZ. You don't know until you get those releases of those corporate earnings and liabilities and stuff like that, right? Unless you're sitting on the board, unless you own enough stock that you're going to be joining those board meeting calls. And in that case, you're one of the insiders that already knows why price is doing what it's doing at auction. Okay. But most of these people, these macro freaking experts, they don't know shit about shit. They're really good at identifying the problems, and they know nothing about the solutions, and they know nothing about the auctions. But they're really good at scaring people. And unfortunately, I don't think that I apologize for some of the people that I recommended you guys follow. They were very good, and then they switched focus to becoming macro experts because bear markets are really boring. And things look bad. Things look really, really bad at the lows. And they look really, 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 really good at the highs. Everything looks really, really, really bad right now, and it's ripping to new highs. What does that tell you? Anybody know? Sorry, I'm off on my soapbox now, but it's just so frustrating. I watch so many people just doom and gloom. And what did I tell you all? Do not buy their bullshit, because they don't know what they're talking about. The structure, the volatility levels, it's literally all about your trend, support, resistance, volatility, and that creates momentum. When trend starts to slow down and it starts to reverse and regain, on the lows, regain, we hit extremes on volatility, retest, start to break that downtrending structure of this low, comes back down, higher low than this low over here, higher high than this high over here, come back down because we got to see it getting above this wick, comes back down. Oh no, it's a lower low. Well, yeah, a little bit of a downtrend. What do we need to see? We need to see this taken out, gets taken out here. That also takes out this high. Now we need to just see this high take out. It pauses right there and then boom, up. What happened? Well, trend started to shift. You always see choppiness around a trend shift because what do you have to do? You have to break the downtrend. You have to then create new trend, and you're going to get mixed trend in between there. So it becomes about trend and support and resistance. And then you're looking at volatility. We went from expanded volatility to compression, and the re-expansion was to the upside. And this is all across everything that you will ever chart. Anything that you can put on a price chart, you can do technical analysis that way. Trend, support, resistance, volatility, and that drives what is momentum. And in this case, we could see that things agreed. Momentum was going to flip. Also, it held the lower first. That was a big one for me. When it held the lower first there, 26,500, boom, blast off. We talked about this right when it happened. 26,500 is probably the low. It's the same thing in Bitcoin. It's the same thing in traditional markets. It's the same thing for every stock you're going to look at. And again, all the worst news is going to come out at the actual lows. And all the best news is going to come out at the actual highs. Look at how much money everybody's making. Look at all these companies. This is the richest company and it's going to go up forever. Here's my crazy target to the upside. What do you think's going to happen? You think everybody's going to go, oh yeah, it's going to go up forever, never come back down, right? No, it's not how liquidity works. In fact, if something was to go up forever, you wouldn't have any opportunity to get liquidity out. Same for the downside. Man, I'm just so frustrated by I looked over and there's somebody sitting next to me, just so you know that Mr. No Name is here with me. And he's scrolling through and showing me this stuff. Do you want to get on the microphone? Because you're riling me up over here. You want to get on the microphone? No. Okay. Yeah, he's showing me some of the most recent stuff from some of the people that I've unfortunately, I like them. I think they're good people. I don't think that they mean any harm in what they're doing, but they are propagating narratives that are bullshit. So I feel like I'm going on a rant like MDX Crypto or something here. Landy Rants / MDX Crypto, because I know that he's been calling out a lot of crypto guys lately, as he should. Dude's been around forever. And he has a lot of credibility, not only when it comes to charting, but in the industry with coins and products, and he knows his shit. So, and he's an honest and good guy. Anyway, yes, you know exactly what I'm talking about. Everything's bigger in Texas, including egos, apparently. And that's no slight against Texas itself. It's just a little bit of a clue for those of you who aren't in the chat. Good dude, though. Very good person, but complete and utter moron when it came to calling what was going on in the markets, that's for sure. Trying to equate the macroeconomics to the market situation is very different. It's two different skill sets. And you can master both, but you're either going to focus on one or the other. And usually those fundamental guys like that are incorrect. By and large, they're incorrect. Why? Because they're usually following the media narrative. Right? That's what they're doing. They're following the media narrative. When was the media right about any of this stuff? You guys tell me in chat here. Has the media been right about the markets at all? Oh, that's right. Never. It's almost purposeful, huh? It's a great counter signal, that's for sure. Yeah. And the media is usually wrong about way more than just the markets, but that's a conversation for a different topic and channel. In any case, yeah. I would still be aware of a Dixie bounce pretty soon, by the way. Momentum is extremely it's at extremes, extremely oversold. 102.82 is going to turn it back up. It's already turned up, but it's in the extreme zone. We see mean reversion happening here. I would be aware of a 104 to 104.5 strike, regaining the lower first. So we might see some strength come back into the dollar as markets are really getting pretty overheated. So now don't equate overheated with it can't hit things over time. It can't hit those upside targets over time. But I would beware of what Dixie does, because I need to remind you, most likely for some of you, this is a big structure that has a lot of room for Dixie. Okay. You know, we can have Dixie be strong and markets be strong at the same time. And that's actually preferable. That's what you want to see. But just to kind of pull it out, this is the Bitcoin in 60 seconds chart. But, you know, it's finding support on the previous high from 16, right? So that's the quarterly. This is a back test of the low that was solidified here in the July closing quarter. So we've got our September, October, our July open to the September close, which is the October open to December close or January close, right? So you really got to understand that this is more biased to the upside. What you want to see, though, is it break down from where it is. Like if you really want to see markets just go on an absolute tear, you want to see it really start to break down from where it is, where it put in that low at the 90, our big area of support down here at this $99, $98 level. Again, though, you have to remember that the US dollar index is traded against a basket of currencies. It's not directly traded against markets. This is a good indication of where liquidity is heading. Is the dollar stronger, or are things going back into other currencies and into markets? Well, right now it's been coming back into markets. Now, the one thing I will say is because this did run the upper second, upper third area, close outside of it on the quarterly, there is the possibility, if we can see what happened in 2015 into 2016, it hung around the upper first and then, basically went back and even closed above the highs before a massive, massive sell-off. And we could see a scenario like that, but I want you to note where the quarterly is in terms of its momentum pivot. That's at 112.50. Now that is going to come down because we do see both the K and the D read, and this is a regular Stoch again. This is not a Stoch RSI. This is close over close price action that we're looking at here. So, what I would be aware of is that is pressure down. So if we do see this upper first lost, then the basis, which is coming in at the low wick here at around 99.5, the basis is right there at around 99. It's likely to be right around that 99 to $100 at the basis. That's probably a good bottoming area, at least short term, to be looking at. So that could cause volatility within markets. But if it is lost, then we look to that lower first, and that's much, much lower. That's going to be in the 93 to 95 area. And that would be losing this consolidation structure from 2019 into 2020. So just be aware of that. Monthly is a lower high as well, but this is a consolidation. This is going into a contraction, and what you want to see is you want to see it lose the lower first at 101.94. That's our 102 area. If it loses that, then we step it down to the lows somewhere around that 99.57 to the lower second. Now, if that starts to happen in conjunction with a quarterly close, then we're looking for a massive move down in Dixie. And that's going to equate to probably a very massive move up in markets across the board. All right. So that's also going to likely lead to some of the things that we talked about earlier, like we're going to see reinflation. We're already seeing inflation tick up again, but probably pretty aggressively. And you're probably going to see central banks start to lose control. They've already lost control, but we don't, not going to publicly admit that. Right. Yeah. So that's I stopped doing the technical analysis a while ago, just kind of here and there as I rant and rave, even not rant and raid. Boy, can't talk, but that's okay. Let's go ahead and take a look at the chats here. We'll throw on the music and take a look at the chats, see how everyone's doing. We'll throw on a song called Retro Waves. And it appears I just have everybody laughing over in the private chat about, and you're encouraged. Oh, I see you're encouraging No Name to troll me. Wait, I thought I saw somebody else. This started with Bobby. Let's troll him a bit. So this actually started in a public chat, and you just decided, you jackass, you just decided to take it and run with it with the private group. All right, cool. So we got the tunes on. Let me go ahead and look at the chats here. If you are in the public chat, that being either Twitch or YouTube. Twitch, I'm not watching the chat, so jump over to YouTube. It's Landy's Crypto Corner on YouTube. There is a link on the Twitch homepage there. And if you are on the Landy's Crypto Corner YouTube here, you can subscribe to chat down below. Subscribing is free, and go ahead and like the video if you like the video. Dislike it if you don't. Either way, it helps. All the information is free. I don't charge for anything. If you ever get messages from me, I don't have any private groups or any paid stuff. Indicators are free. Information is free, and all that stuff. So, all right. Let's go ahead and look here. Yes, No Name, I see you in there. Bobby, hello. Spin, hello. Don, hello. Welcome. We've got Roka. Hello, buddy. Sam, how you doing? Cheryl, how you doing? And we've got quite a few others that are hanging out, so feel free to jump into chat. If you have any questions or comments, let me know. All right, so let's see here. Is it snowing? Not snowing where I'm at. Big problems. Oh, hi. Hey, what's up, JR? How you doing, buddy? Yeah, you even get free rants. You even get a Landy rant for free. Or a couple. Doesn't happen often, so enjoy it when you hear them. I see German. I don't understand that. Something about Schweizer chat. I have no idea. I probably said that wrong. I can't read the rest of it, so. I got private chat says use AI to convert your videos to a foreign language, just for the hell of it. Oh yeah. Oh, do the voice clone and then have it dub the video. Well, this is like 2 and some odd hours long. Those things cost a lot of money. Do junk bonds? No. I can answer that right away. Nope. Technicals beat fundamentals every single time. No, they go hand in hand, because the fundamentals drive the technicals that you see, and the technicals, when things start to flip, are very obvious because of the underlying fundamentals. You just get a nice preview of them trying to hold on for dear life, either on the highs or on the lows. You get a preview of where the fundamentals are headed. Yes, Bobby said the person's name. That's another one. You got your Kramers of the world who are consistently counter trade signals. But they're not the only ones. Just the news in general when it comes to market, fear and elation. Bobby says, I enjoy the ranting a lot. Ordy. I can look at one. I'll look at Ordy. Yeah, that's some killer saxophone going on right there, isn't it? Let's go ahead and look at Ordy. Any particular exchange? Binance, probably, if I had to guess. Perp futures, if I had to guess. There's got to be a longer chart for Ordy, though. I think I have it already saved. I don't. How do I not have it saved? I freaking trade Ordy. Yeah, Bybit's much longer history. On the daily, at least. Roka says Landy's slowly turning into Greg Minario until every video is a rant. Let's get to the upper second standard deviation of the Landy rants bands. I want to take a longer look at Ordy. This is high level consolidation. Looks like it wants to go up. I'll tell you that right off the bat just by looking at the chart. Doesn't mean it's going to, but just my initial glance at it from here. Just want to see if there's like one other exchange that has a longer history. Okay, I think this is going to be the longest history we can get as TradingView native. Look, this is a consolidation, and I mean I got into Ordy a while back. I think right around the same. I can't remember, but I think Roka's the one who was posting about it. But I was also hearing about it. But I think that's why I got into it when I did. This is without looking at anything else, this is a consolidation structure, as you can see by the bands, also by price action kind of hanging out in the range. Just, simple breakdown. You want to see 1352 hold on any big drawdowns. And on the low side of that, 1170. And I believe this was a big reclaim area, I think, on a weekly in and around this order block. You notice I'm not taking the wick highs. You can if you want. 14.5 would be a big bullish strike that threw a wick down there. The only way that's going to happen is if we see expansion below the lower second standard deviation at this point, and that's dropping 1814. I would say if it gets above the basis at 2175, I think that's on my other monitor over there because I have chat in front of me, and my ginormous beard keeps hitting the microphone. My apologies. No, above there it's probably going to run 23 to 25 bucks again, upper first, upper second. So above the basis I would be looking for 23 to 25 and above, and I'm looking back to the highs at 28 to 30. I would say from the current consolidation drawdown, we'll pull a fib. Is this lower? It is. I would say, make sure this is log. It is. Yeah, so at 30, the 32 or so, if it does start to get expansion above the upper second and break the high at 28.30, then I'd be looking 30 to 32 at the 1272, about 33 to 34 bucks at the 1414, and about 35 to 36 at the 1618. It might even push up to 40 and beyond. I mean, it is very aggressive coming out of expansions, and this doesn't necessarily, I'm not favoring the downside on expansion on this, especially, see, we didn't even look at this yet. This is likely going to, head up and at least test, 20 to 25 bucks pretty soon, 23 to 25 bucks soon. 2036 is the momentum pivot. Looking to get that cross up today. Let's see what the weekly's looking like though, because the weekly's painting a high, but the weekly's still good to go. Anywhere above 15 bucks looks good to keep testing testing the highs and higher. This was, I believe this was, we were trading this to the downside. When it initially launched, it was not on a lot of exchanges. I think some guys were trading it to the upside. I did get a little bit before it was even listed publicly. And then when I believe it was Roca brought it to my attention somewhere around August, September, looks like it's probably going to draw down and bottom out soon. And he was 100% correct. I forget when that was. It was right around the lows though. And I had accumulated some more. I think I like Ordi. I don't really know what's going to happen with it. I don't really have a vested interest in day-to-day trades, but I do pick up longer form trades. So consolidation to expansion, I'll be in on this one as well. Hint, hint. If you're on the exchange that I trade on, some of you know which exchange. But yeah, looks good on the 2-day as well. Now, granted, the 2-day it needs to get above 2269, always with a meme number, and then push that upper first. 23 bucks above there, it's gonna start to paint this low. Yeah, and then it pulls in that $30 target that I was talking about. So yeah, looks good. As long as it's holding the lows at like 18.5, it's looking good. Other than that, watch 15. If 15 falls apart, it's going to go for a deeper retrace. 10 to 12 bucks or so. But for right now, it does look as though it wants to go up and to the right. Again, might find some short-term resistance at the local highs, so be aware of that. But if it does break out, that's where we can start looking at 30 to 32, and then the 35, 36 area, and then 40. Oh, you're joking about CHC. Is that Chili's? I think it's Chili's. I don't know, a lot of the coins that were hot last cycle, you're likely to see like AI coins become a really big thing again. It's going to be the narrative going forward. You've got the full rollout of X's AI is coming out. We've got a bunch of new AI products coming to the market from various companies, and it's probably something that I will start tracking, when the time is right. There's stuff that I've, already accumulated over time, but more from a trading perspective. Whoops. You want UOS, right? Okay. What is up with my keyboard? That is the U. Oh, I see. The key got stuck. But yeah. Ultra is the gaming stuff. I think gaming will be big eventually. I don't really care about what's been announced prior. Someday we might see some of these rip. But man, so far it's been RIP for most of the gaming coins. Here's why I think gaming coins that already exist are going to be a bit of a problem when looking at them. So most gaming companies are just going to take all of their existing virtual currencies, and they are going to create their own blockchains surrounding those. Ubisoft is a big one. Now, I know they've partnered with some of these gaming chains. You got to understand, some of these gaming chains are more focused on trying to beat Steam. What happens when Steam comes into the market and Valve Bucks or whatever, V-Bucks. I think V-Bucks is a Fortnite thing. But they already have a working exchange for items on Steam. So the big one is going to be look for what Valve does in the cryptocurrency space, because eventually every company is going to have their own cryptocurrency. I've said this before. It's going to be the gift card of you can equate it to what the gift cards are today, except you can trade them. And they will gain and lose value over time. But the ability for you to then trade items that you've bought with virtual currency is going to be the next big one, which is going to basically be tying in the virtual currency or coin with NFTs, and just putting them on the blockchain that way. So that's where I think things are going to go. That said, Ultra does have a decent structure. Something that I have accumulated quite a lot of. I let a lot go during the peak in 21. And, I have accumulated a bit here and there since. I got some when it first, basically launched. And I just kind of held it because I looked at it as not ready yet. And I don't think it's ready yet. Now, that being said, the weekly's at 16.5. It is trading above there. Above the momentum pivot. It is starting to push. I'm not really going to take the daily on this. This is more of a long form. I can always look at VXV. I know VXV as well. This is just a downtrend. This has done nothing so far. It is a wider downtrend. Yes, it is in a short-term uptrend on the weekly. Unless it pushes through or comes down and makes another higher low, which is what I want to see at around where the current weekly pivot is at 16.5 cents. That would look good. If you're looking any lower than that, you don't want to see it past the lower first around this low, and that's at like 14.2, 14.3 area, and 14.2 to 3 cents basically. Above the upper second at around 20 cents, I'm looking for this to leg up to around 27 to 30 cents. There is a little bit of resistance at 25. We do have a pretty solid low here. So you could take 25 to 30 cents as the range for markup there, which is roughly a little bit above the upper third as it stands right now on the weekly. The daily is in a consolidation, so this is going to be ready to move soon. And it's probably likely to move to the upside if the market overall moves to the upside. Volatility is basically dead on the daily here. So it closes, here higher. It's going to start painting a local low. It's kind of kind of already in, but it's not very strong because of the wicks. Back above this open here at around 20 cents, puts it above the upper second. That's where we're looking for expansion to 25 rather to 30 cents or so. Probably more, to be quite honest. This is a very tight compression on the daily. I would caution if it does really like rocket, you know, above there is a little bit of resistance at around above 30 cents to around 35 cents, 33 to 35 cents, right here at this little distribution structure. Well, it was accumulation to distribution, but you know, the potential for 40 cents is on the table if it can, especially close a weekly above 20 cents. So that's where I'd look for its fortunes to start changing. So, but yeah, it's good above 15 cents. You don't want to see it lose 14.2. Gets above 20, it's going to go into an expansion on the daily. And that also would lead to expansion on the weekly. So above 20 cents, looking for 25 to 30 cents, possibly a pit stop at 33 to 35 if it gets above there, and then 40 is the next stop. Below its current lows, and it's going to be a run down to 15 to 16 cents, and you need to see 14 to hold. But it looks good so far. And if it can get above 20 cents today, I believe it's going to shift its momentum as well, but I still need to see it set a low. It needs to take out this open right here, this to really, and that's at 20.617 cents. Okay, that's where I'd be at. If I start seeing that, then I'd be traded to the upside. Local high, of course, to 25 cents and then 30 cents. 30, you might as well just, the next big area is 33 to 35, but you might as well just say 30 to 35 and then 40 cents. Probably up significantly from there, because we're probably seeing the rest of the market break to the upside. Did you want me to look at VXV? Need to see the final pullback on total 1, total 3 charts. We're probably going to see pullbacks, right? But pullbacks are probably going to be very bullish. People who are collecting alts, this entire bear market are going to do very well. I'm not against alts, but Bitcoin's king. And for everybody in the YouTubes, go ahead and throw a like on the video. We're probably going to start wrapping up here. I will look at VXV for Roca here. Vector space, yeah. Vector space looks good. This is actually something that I have been paying attention to. This was a very big, just hellaciously bad chart, but it was getting really extreme to the downside, and my thoughts on it were, if the project can still survive this, then it's likely to bounce hard, and it has. On the weekly, it's looking for upside expansion, but what I will tell you is volatility is stupid high, so be careful. Pullbacks that pull back to 33 cents are fine. Below there, not fine. Does need to get above this high at about and the reason why the volatility range is so large is because of the expansion. So it can drop like a rock, just understand that. But the close up here is what it needs to beat out at 77.8 cents on the weekly. If it can do that, it's likely to run that wick high into this low over here. This low is coming in at $1.38. Wick high is coming in at oh, it's just shy of there. I thought it was higher. So $1.30 to $1.38, and then it's, you know, it's log scale. So the next big area would be around 234 to just under $3 at around 275. So yeah, I think even on Dex tools though, it's like just down. It's down and to the right, isn't it? I don't think it's ever been. It opened and then just dropped like a rock, if I remember correctly, even on Dex tools. I'm logged in as me on Dex tools, so I'm not going to go to it right now till I can get my Landy's Crypto Corner account in there. You'd have to tell me though, Roka. But yeah, I mean, it's as long as it's above 33 cents. This accumulation over here where the basis on the weekly is, you can give it some room, 30 to 33 cents or so. Below there, danger. It's going to run the lower low. Okay. Yeah, I've been tracking it for a while, but really only around 2022. So I caught some of this move into 2023. And then I did pick up a little bit. I want to say it was in September. It was somewhere around when it was being talked about, because that UOS, we were talking about all of these, including one that I credited you for calling to my Ordi was another one, because I only periodically buy alts, and I typically will buy alts when Bitcoin's in the process of putting in like a big daily low. I'll pick up some alts, and then outside of that, I just have my regular alts that I trade, and I still trade LTC regularly, and Link, and ADA, and all of them. All the ones that you know, all the big caps. Mainly because of the liquidity. You need the liquidity. On some of the smaller projects, it's just not enough liquidity, and it can't even exit once you're pushing price in a particular direction. Unless you have a huge, massive audience that you're shilling it to for exit liquidity. Which I do not have, and I would not do anyway. That's, you know, my main focus is Bitcoin and traditional market stuff. I just do alts when you guys request them. Let's go back and look at Bitcoin. Oh no, it's falling apart. It's at 38,780. Sorry, what? I had a like taken away. Oh no, somebody doesn't like the video. Oh no. We're trending in the opposite direction on likes here. Excuse me. If the pullback makes a higher low around the week, Capo was right. Oh dear. All right, guys and gals. I should have a Bitcoin in 60 seconds later today. So look out for that. Of course, it's probably going to be very close to what I've already talked about today, but I do want to see where the upper second standard deviation goes. And if Bitcoin closes above it. Excuse me. Woo. And then we'll kind of go from there. We've got, quite a few big closes this weekend. So just to follow up, there's a weekly, 2-week, 3-week, 4-week close. So weekly upper second is at 39,210 right now. The 2 week, it is above the upper second, kicking off aggressive expansion to the upside. So this is looking very good on the 2 week. If it closes like this, going to be very, very, very good. Nice expansion. Pullbacks even to guess where the upper first are bullish at 33. 4 week, it's looking to close above the upper second as it stands right now. If it can close above 38,300 specifically on Sunday, that's going to probably cross get continuation of expansion of BBWP, but we may not see the moving average cross just yet. The 4 week, it's above the upper second standard deviation, so this would also aggressively start to expand to the upside in terms of the Bollinger Bands and continued expansion on BBWP here. So just keep an eye on basically 38 to 38.3 coming into the weekly close. It's going to be kind of the common area across the 2 week, 3 week, and 4 week. That would paint the picture that things are going to continue to head up and to the right. Pullbacks, perfectly normal in between. Unless we see, 33K violated on Bitcoin, I'm not looking for much to the downside. And if we did see anything below there, that's my opinion, an opportunity, a big one, a very, very big opportunity. So I think that's going to do it for me today. You all have a wonderful weekend. Have a wonderful day as well. A wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And I'm going to stall for just another moment here while I get this going for the end of stream tunes. For those of you that like to hang out and scrub through the video and then maybe listen to some beats afterwards. As quite a few of you do, I found out. Cut it short one day and I got a bunch of messages going, no, stop that. Turn it back on. Like, I can just send you the songs if you want. They're free. They're royalty free. All right. Yeah. Take care. Have a wonderful weekend. There's no football for me this weekend. My Bills aren't playing. What a game, man. Jeez. Anyway, that last week against the Eagles, what a shit show. Also a great game all around, except for the refs. Bad game on them. Yeah, no football this weekend, so I might even maybe I'll be on just screwing around on the weekend. We'll see if I throw a stream up or not. But yeah, take care. Much love. Talk to you all next week, and see you in the Bitcoin in 60 seconds videos. With all of that said, Landy out.